What up, people? Happy Saturday. Welcome to Wealthy Conversations. Y'all know we do Wealthy Conversations every Saturday, usually at noon. Today, we are a little behind now. Today, we are starting off at like noon-ish or like noon plus 30 minutes-ish. But it's all good. I'm here, you're here, and we're all going to have a good time. Today's topic is 7 pieces of investment advice for new investors. Again, 7 pieces of investment advice for new investors. We've been seeing an onslaught of people coming into the space, wanting to get their piece of the American pie, wanted to increase their net worth, and they have decided to come into the stock market to get their fair share. So with that said, let's talk about it, because I'm seeing a lot of things happen where folks are suffering from ignorance. What is that Bible verse where they say, my people suffer from a lack of knowledge? So I'm here to try to help remedy some of that. I know everybody ain't gonna listen to me though. Some of y'all just hard-headed. Some of y'all gonna be like, he old. He don't know what he's talking about. Actually, I've had a few people tell me that I'm old and I don't know what I'm talking about. But listen, it's all good. If you're seeking for validation from the outside, then that means you ain't really validated yourself. And I've been validated inside, outside, and all around side. So I'm good. I'm good to go. All right. So before we do that, let's just jump into the market rundown for the week. As folks start to trickle in, I see a few people are in on IG. Low key popping. How are you? I didn't forget about you also. Jasmine, how you doing? Also, some of my folks are starting to trickle in on Facebook as well. Angela, how are you? How are you? How are you? Oh, Angela has shared. Oh, aren't you the model role model today? So everybody follow after Angela and do what she did. Share this out like this, right? Promote this for me, because I forgot to do any promotion this week, y'all. I'm sharing my delinquency with you all and being transparency this week. Just been a little busy. So I appreciate you for that, Angela. All right. Mr. Tariq Ellis, my brother from another. How are you, sir? How you been? So, all right. So as we get into everything this week, the stock market closed at 3,884 as we're judging from looking at the S&P 500, 3,884 points up. Week to date, 2%. Year to date, the stock market is up 3.48%. So as we get into February, starting off February, the first week in February, the markets are still in a positive position. That's good, I guess. I'm still expecting a correction. Not sure when it's going to happen. And a lot of things are starting to happen in DC, especially also with the vaccine, where I think we're also going to have a prolonged bull market even further. So things are definitely getting a little bit interesting. Well, they already are interesting, right? We saw Jeff Bezos step down this week as the CEO of Amazon. And he's going to be replaced of the president of the AWS system, which is their cloud-based system, which makes up about 40% of Amazon's profits. So I think they're in good hands. Jeff B has been in charge for the last 27 years. I think he's done a stellar job. They don't say he's the greatest person, but they don't say he's the worst person either, right? So anytime you're leading a ship, you're going to get the good and the bad. And a lot of times you're going to get portrayed as the bad guy. We knew the previous president hated the guy, but I think that was for right reasons. that had a lot to do with Jeff B owning the Washington Post. So not to be confused, Amazon doesn't own the Washington Post. Jeff Bezos does. All right, but here's the trick. Even though Jeff Bezos is leaving as CEO, he is still going to be a part of the executive chairman. Well, he is going to be the executive chairman, which is on the board, which runs the board. Many times, everybody thinks the CEO runs the spot, and they do. They do have a good share power, but it's actually the chairman of the boards that actually have a great say. And so keep that in mind. Chairmen of the board or chairwomen, right, or board chairs have great say, great pull, and they usually are the ones that are directing the strategy and vision to a large part of the overall company. Many people think it's just the CEO. So it's not just the CEO. So, keep that in mind. When y'all get a chance, look up and see who is the chairman of the board of Microsoft. I think you'll all be pleasantly surprised. Now, if you've been rocking with me for a minute, y'all should already know that because I've shared that a long time ago. But you should know that. All right. So oil, moving right along. Oil closed at $57.07. Again, $57.07. If y'all remember from last week, oil is up, right? Oil is up over 4% this week. Oil is up over 17.5% year to date. So many people are expecting that oil, right, travel, people that are riding around in airplanes and automobiles are going to do more travel as we get more vaccinations flowing through the population. So it's not a surprise. It's not a surprise that oil continues to keep rising. All right, so I'm not going to say that's a good thing, right? Because that's still money out of the consumer's pocket and pocketbook and wallet. So because eventually that's going to trickle down to gas prices, and gas prices will continue to go higher. That's never fun, even though many of us aren't driving as much as we were before. So it's still good. Still good. Gold closed at $1,815 again, 1815. Down 2% year to date, down 2% week to date. So it's down on the week, right? But guess what? It's also down on the year as well. So it's down a negative 4.7%, almost down 5% for the year. So that is very interesting that we're seeing gold start to fall. Now, I tell y'all almost every week since we've been talking about it, that gold is what they call a safe haven asset. A safe haven asset. Times of trouble, people run to gold. Times of trouble, people run to U.S. treasuries. Times of trouble, people run to the Japanese yen or Japanese bonds. Why? Because they've never defaulted on any of their payments, and everything's pretty safe and secure over there. So, again, I find that really interesting that gold's starting to fall. I think some people are starting to get a better sense of normacy, if there is such a thing as normacy in this country and around the world. But it's starting to get there. It's starting to get there. So as we move on, again, Amazon is going to be really interesting. Again, their president of AWS Services is coming over. Now, the president of AWS Services is coming over to become the new CEO. Now, I find that interesting because AWS, people don't realize it. People only think of Amazon for online shopping, but AWS is kind of another platform for online shopping because it's fueling a lot of e-commerce. It's fueling a lot of digital. It's basically cloud storage for a lot of companies, right? But they are really providing a big portion of Amazon's profits. And so it's very likely that AWS cloud services will lead Amazon's growth largely in the future. By the way, Amazon accounts for, well, let me back up. So Amazon accounts for about 5% of online traffic, right? But let me back that up even more. I just looked this up, so I got to do a quick correction because I told y'all that only 5% of retail shopping occurs online. Well, that number's changed. I've been giving you guys outdated numbers. I had to go back and do some research. My son actually challenged me this week. He said, it's only 5%. He said, no, it's got to be more than that. And I said, yeah, it was 5%, but it was 5% in 2018. Well, here we are, and coming out of the year 2020 and now 2021, that number has grown. Anybody want to take a guess what that number is? The number now is 14.3%. So all of e-commerce accounts for 14.3% of retail shopping. All right, so 14.3% of retail shopping is done online. Out of that, right, for approximately 50%, Amazon approximately accounts for 50% of online shopping. That's a staggering number. I don't know about y'all, but my mouth dropped when I said that, when I read that. I knew they had a lot. I didn't know it's 50%. So as we start to move more and more and more to online shopping, so when that 14% goes to 20, well, then that means Amazon will have about 10% of all online shopping instead of 5%. So they kind of are so well positioned that they're going to make money from increased online shopping unless they do something really, really bad. And they're going to continue to make money off of AWS, which is also fueling the online boom as well. So they're eating directly from retail, and they're eating off of the back end of all these businesses that are getting on Amazon, or excuse me, getting online, doing more digital work. So I found that really, really interesting. So let me check in with folks real quick. I see we have more people join on. All right, Don Johnson's here, y'all. So listen, Don's here so the show can begin. That's a little running joke we got. What's up, Adrian? How you doing? Jose, how you doing, brother? Thank you for joining. Miss Edith, good afternoon, Kamara. I wonder where you are. Yeah, I know. Everybody was wondering where I was. I was a little late. If you're just getting on, my apologies. I know the show's supposed to start at noon sharp-ish. But I got on a little bit later, about 30 minutes late, so I apologize. Please, nobody dock my pay. Please, nobody send any requests for money. Speaking of money, since we're talking about Miss Edith, so last week I announced Miss Edith sent me $50 while we were live. Then Miss Edith went ahead and sent me another $50 on my Cash App. So Miss Edith, God bless you. I appreciate it. I'm humbled by your gifts, as always. So again, thank you. All right. So Angela, hello. She's saying hello to Miss Edith. She don't care about me. All right, Miss Edith says, do you know anything about Dogecoin? It's a new coin that everybody likes. It's been getting plenty of hype, and the Reddit people love it. But we can. I want to be doing some more talks about crypto. I just got invited on a national platform to talk about crypto. I don't know why they invited me, of all people, because y'all know everybody think I hate crypto, which is not true. But that's the word out on these social media streets. So, but as we get into it, I'll definitely be talking more about it. Oh, now Angela says hello. So hello, Angela, how you doing? What's up, Jamar? How are you? Adrian, y'all doing y'all internal networking. Let me get out of this. Okay, Ms. Edith's on Facebook and YouTube. I appreciate that. Get my likes up, get my views up on both platforms. Y'all know I'm fighting the algorithm, so do me a favor. Please like, share, and comment on this. All right, so Adrian says, I'm surprised that the number isn't higher for online shopping. Introverts like me do the majority of shopping online, including grocery shopping. No people, no crowds, no screaming children, no waiting in line. All right, well, listen, introverts unite. A lot of people don't think I'm an extrovert because I do this stuff here live, but I'm not. I'm an introvert. I would never go outside if I didn't have to. But that's not true. I do like going outside, but for a walk by myself or with a few people. But, it's all good. It's all good. But the introverts, actually, they say that they're more extroverts than they are introverts, right? So then that would kind of explain why people still like to go out and go shopping. And I'll be honest, I do like to go out and go shopping every now and again because, yes, introverts do get cabin fever. By the way, most people get introverts and extroversion and introversion wrong. So they think that introverts just don't like anybody. They're curmudgeons that are stuck in caves that don't want to do anything. That's not true. Not true at all. They think introverts are antisocial. That's not true at all. The true definitions of introversion and extroversion are, where do you get your energy from? So if you are out with a bunch of people and you get energy and then you become the life of the party, that's a great case of extroversion, right? Introverts can go out and be the life of the party too. They just won't be able to do it as long as everybody else. Typically, they then run out of energy and have to go back home and recharge, right? Extroverts get their charge from people. Introverts get their charge from isolation. So just keep that in mind, because a lot of people besmirch the name of introverts, talk bad about introverts, slander introverts. Don't slander us. Be kind to us. All right. So Miss Edith says I pour into her and she should do the same. I agree with that. I go with that. Value for value exchange, mutually beneficial relationships. Everybody should have mutually beneficial relationships. All right. Hey, Miss Kathy, how are you? Yes, I'm discussing the stock market. Today's topic, y'all might think I'm meandering a little bit, but today's topic is 7 pieces of advice for new investors. So y'all know I basically cater to new investors, new beginner investors, new beginner wealth accumulators. And so today we're going to talk about 7 pieces of investment advice for new investors. All right. So just let me get to all my hellos. So Miss Edith is a Amazon lover. No, I'm not the life of the party. And don't you come on here starting your stuff, Kalila. You always pick it over me. All right, so we got everybody on Facebook. Let me see if I got everybody. All right, so Jasmine says we need more chairwomen. I would agree. We need more black chairwomen too. Kay Praga, how are you? Images by me, how are you? Papillion 0512, how are you? Welcome. John, how are you? Cindy, hey Cindy, where you been? Jazz says that 14 seems low. By the way, Microsoft's chairman is a black man. So, just for the record. All right, so Jazz says even 14 seems low. Yeah, but it's growing. Jazz says introvert unite. Yes, Jazz, you're not an introvert, are you? You seem like you're the life of the party. All right. Jay Phillips, how are you? Welcome. All right, listen, everybody's here. We're all assembled to have a good time. And so let's get into the meat of today's topic. All right, so 7 pieces of advice for new investors. Now, just want to tell y'all why am I qualified to talk about this? Because some people who watch me don't know my background, my story, or anything. So real quick and abbreviated, right? Over 20 years of experience in the financial services industry, ranging from taxes and accounting to being a financial advisor, and then ultimately becoming a investment or a portfolio manager for some institutional firms, aka Wall Street firms, for simplicity's sake. All right, so I professionally invested hundreds of millions of dollars, almost close to $1 billion, but I didn't get a chance to eclipse that big. Not yet. Maybe one day I'll come back and open up a firm and do something. But my love and passion is for the people, especially the people in my community. So I want to put my time and energy into helping making sure people get the right education and some good direction on where they should be going in terms of investments. Because, you know, everybody jumped on the GameStop bandwagon, the AMC bandwagon, the Nokia bandwagon. Everybody's been jumping on bandwagons. When you are an investor, it does not play to your accumulation or to your strengths of an accumulator to jump on bandwagons. And when I say jump on bandwagons, I want to be really, really clear. You can see a stock going up, right? If you just buy because it's going up and everybody's talking about it, then you are a bandwagon rider. Now, if you do your research, thorough research, and some more research again, you're not a bandwagon rider. You had a thesis, right? You had an idea of why the stock went up. You said, you know what? I'm going to dedicate some time, resources to research this. A Google search really is what a lot of it will take. And you say to yourself, I'm going to research these things so I can be an informed person. By the way, if you were to go buy, let's say, a new Benz for $100,000, if your neighbor brought one, that might be the incentive to go look, but I'm sure you wouldn't commit $100,000 to a Benz or any car or any investment sight unseen without kicking the tires and popping the hood. So that's what we got to do when we begin to invest. We got to kick the tires. We got to pop the hood. We got to take things on road tests to see if they really can stand the test of time, to see if they really are worthy of our hard-earned dollars. Listen, we work hard for our money. There's no need to squander it away. So a lot of folks that were starting to buy GameStop, when GameStop ran up to $500, GameStop is now, I saw it at like $60, $63.77. Right. So think about that, y'all. At the beginning of the year, GameStop started about $18. It hit $500 in pre-market, 300, 200, all around there. But what about those people that brought in at like $200, 250? They've lost money. They have lost money. And many of them couldn't really afford to lose the money, right? Let's just keep it funky. They really couldn't afford to lose the money. And so that's why I say sometimes you gotta be able to go the other way and go against the crowd when you are an investor. I mean, I actually believe that in real life, but we're talking about stocks down the stock market. So it doesn't pay to be a follower. It definitely doesn't pay to be an uninformed follower. It's actually very dangerous. So I'm always preaching the gospel of investing because I do believe in investing. I believe in the wealth accumulation power of investing, right? However, I don't believe in the followership of just blindly following people and giving up your money. That's dangerous. We don't need none of that. Again, I talked about Tesla to y'all the other day. Y'all know I'm not a Tesla fan, right? But the market has run Tesla up. And then to find out that most of their profits are coming from these credits, not actually car sales. But it still seems like people are still subscribing and worshiping at the altar of Elon Musk. And listen, that's good. No hate. It's your money, player. Keep playing on. But sadly, there are going to be a lot of people in the end, I think, if they don't really right the ship and get it together, they're going to get hurt financially because they haven't really done their homework on Tesla. Right. So it becomes worrisome to me. And again, I get labeled a hater. I get called a contrarian. I actually am a contrarian. I will own that. I'm not a hater though. They are different. Contrarians they just kind of inherently know that if everybody's going left, you might want to at least look right first before you decide to go left with everybody else. Because typically people run in herds and the herds oftentimes get driven right off the side of a cliff. And I ain't got time for that. So I need to look just like when they teach you to drive a car. When you get to the stop sign and you get to the red light, make sure you look left, right, and then left again. Same thing for investments. I mean, so many life lessons are inherent that you can apply to investing. It's crazy. But let's get to it, y'all. Let's get to it. 7 pieces of investment advice for the new investor. Number 1, what's your goal? Where are you trying to go? Where are you trying to drive this car, this investment car that you have, right? You get in your car and you say, you know what, I want to go to the store. So you come out, pull onto your street, you drive to the store. You know what lefts you need to make, what rights you need to make. Now, if there is a detour, 9 times out of 10, you know how to get around that detour because you're familiar with the area. But if you're not, you can always go back and look at your GPS. So for me, your GPS when it comes to investing is your goals, because your goals will let you know why you're investing and how long you're investing for and what the importance is of these investments. Like, what are they going to do? Right. So let's say you are a newborn child. Excuse me. You are a new parent of a newborn child, or you're a parent of a newborn child. So you say, you know what? I've never been to college. Nobody in my family has ever been to college. I believe that college could potentially be a game changer for my family. And so I want to start saving money for college so that I don't have to wait to try to pay for college all at the last moment. And I'll have plenty of money squirreled away. So that'll let you know that you have a time horizon, ideally, of, let's say, 16 to 20 years ish, give or take. Hey, Kelly, how you doing? So you can start designing your portfolio, your investments, your stocks to meet that criteria. You might not want to do the fancy stocks. You might not want to do the quote unquote Teslas and the biotech companies. You say, you know what, I just want regular companies that are profitable, that are kind of boring, that can make sure I hit the goalpost for my savings investment for my child. That could be one, right? So that's your goal. Another goal could be retirement. Let's say you're 25. You want to retire early. You want to retire at 45. So you say, you know what? These are some of the stocks that I believe will do really, really good. Now remember, stocks are just, excuse me, y'all. Stocks are businesses. You're buying a business when you're buying a stock, right? You're buying a piece of a business. You are becoming a part owner in this business. So typically, the better the business, the better the returns. Now, you could always have things like COVID come through, wreck shop, break all the glass, break all the windows, and tear down businesses that otherwise would be great and phenomenal businesses, right? So you have anomalies, you have surprises that come up. But typically, if it's a good business, it's got good management, and they know how to operate it, they have good marketing, typically they can weather the storm. But again, you want to have to factor all those things in. You want to think about all those things. What's a good business? What would you consider a business? Those things that maybe you buy every day. What's on your feet, right? What do you wear? What kind of phone do you use? What kind of car do you drive? What cable service do you have or don't have, right? What streaming services do you have or you don't have? Which ones do you think are great? Which ones do you think will last the test of time? So those are the things you need to think about when you're thinking about your goal, right? Now, if you're thinking about retiring early, right, because you say you're 25 and going to go to 45, you might want to think about saving a lot more too, right? So those are some of the things you got to think about. But again, that's, the first piece of advice I think is very, very key. What's your goal? Where are you trying to go? Because after that, everything kind of starts to fall in line. It's just like, I was going to use an analogy that's a little racy. I don't want to do that. I don't want to get in trouble today, y'all. I don't want to get in trouble today. But it's just like, let's use college again, right? You went to college. What did you want to major in? Right? Which was probably fueled by what you think you wanted to be. Now, we know most people that go to college tend not to go to college. Their major tends not to be what their field or profession becomes once they get out. The majority of people time. But that's what guided your decision. Right, wrong, or indifferent. I don't really believe there's any wrong in that, right? We all learn different things. But if you're a biology major and you're taking a whole bunch of accounting classes, you're probably not going to be able to graduate in a good amount of time. And we all know once we get to a couple years of college, it gets rough. Shoot, we all probably got senioritis when we were seniors in high school. We didn't want to do that either. So when we think about that, what do we want to do? So again, you're a biology major, you're taking all these accounting classes. Well, that's not in line with my goal. So what's in line with my goal? Oh, I probably should take more biology, maybe some chemistry, right? We know you got to do your core requisites, your English class, maybe a philosophy class or something like that. What is everything that's going to count towards my degree? And staying on path and not being distracted. And you know what? You gotta study for a test that's coming on Monday. So on Friday, there's a big party. All the frats and sororities are getting together. Maybe if you're really true to your goal, you miss the party and you study on Friday, Saturday, and Sunday. So you're prepped and ready for your test on Monday. Now, I know a lot of y'all went to college. I know a lot of y'all still went to the party. So that's no shade, y'all. That's no shade at all. But y'all get my point. Well, hopefully y'all get my point that, there's some things that will keep you on track and there are some things that will take you off a track, right? And so GameStop is like the party on Friday, right? You got studying to do come Monday. That studying helps you to get good grades for your ultimate major. But GameStop, the party, GameStop's having a party. All the Qs are in the house. They inviting all the Deltas, right? And they talking about GameStop. That's a distraction though, because GameStop is not in your path. That's not what you're looking to do. Now, please don't get this confused. There are times where you run across an opportunity and you have the potential to maximize that opportunity and you can pivot, right? But that shouldn't be what's the word? A lickety split or knee jerk reaction. It should be something that should be thought about, right, and then executed on. And that doesn't mean you got to think about it for years and decades and eons. I'm just saying you should give it some thought, because I do see a lot of people that get distracted and they go, "Oh, which way do we go? Which way do we go? I like this thing over here, but I'm doing this right here, and that looks more fun. That looks more sexy. They're going to have beer at the party. They're going to have gummies at the party. They're going to have some smoke at the party. There's going to be a lot of cute girls at the party, but you still got your test on Monday." And so you're kind of throwing it all out. So again, you got to keep all of that into perspective. All right. So number two, education. Education is key. Education will always be key, y'all. All right. And everything we do, formal and informal. Formal and informal. How are you educating yourself? So here's a little secret. My son loves to call me and ask me, what stock do I like? What do I think about certain things? For example, he asked me about the Uber deal the other day. They brought Drizzy. I think they spent like $1 billion on it. And Drizzy is a liquor company, so they're a liquor delivery company. And I said, well, I'm not really a fan of Uber in any way, shape, form, or fashion. This is not a recommendation to buy or sell, y'all. These are just examples. However, my son wants to leverage my information, my knowledge, my education to kind of shortcut his investment selection process. He don't want to do the work. He just wants to jump in. He thinks it's sweet. Actually, he is part of the inspiration for this today too, because I definitely can think about him. He just thinks the stock market is just a way to get rich, that the stock market is always going to go up. We know that's not the case. And when you've been through a couple market cycles like I have, market cycles being when it's been up and when it's crashed, you learn real quick that things change real quick, right? Things will go down, things will go up real quick. So I tell him, what research have you done? Oh, Pop, why I gotta do research? I can just call you. And my son's a jokester too. He's way worse than me, y'all. He got jokes for days. So, I tell him, Google it. Then read a book. Don't just rely on a Google search, though. Go deeper. The Google search is just the start. The Wikipedia search is just the start. Go deeper. Go deeper. Go get some books. Like if you are interested in China, for example, right? We know China is number 2 economy in the world. Some would venture to say number 1. It's still number 2, in my opinion, but some say number 1. Go read about China. Go read about how their economy works. Go read about how their social status works. What companies are good over there? Alibaba is kicking butt. It's a Chinese company. They're like the Amazon of China. Why is that? Will they be able to maintain that? Will something else come about because of that? Is there any opportunities there? So education. For the lack of me, I don't know why, especially in this age, that we don't want to do the education. It's right at our fingertips, literally. So I don't get that. I don't get it. All right. So number three, y'all, don't let your eyes get too big for your pocketbook and wallet. Don't let your eyes get too big for your pocketbook and wallet. Again, I could use GameStop again, right? Because people are like, I could throw all my money into GameStop and I could retire rich. Listen, there's some people that made a lot of money in GameStop over this. Some hedge funds that made a lot of money in GameStop, even though this was supposed to be a rage against the hedge funds and the 1%ers. But they didn't realize that there was other money involved in this. It wasn't just little guys on Reddit, mom and pops on Reddit. There were folks behind it too, pushing it up as well. And by the way, I'm still like the only person that says, well, maybe there was some Russian interference going on with this also. I haven't heard many people talk about that. If we have Russian interference with elections, you mean to tell me we can't have Russian interference in the stock market? But again, don't let your eyes get too big for your pocketbook and wallet, right? If you only have $1,000 all in, that's all your money, including savings. You should not be trying to put $1,000 into the stock market at all. At all. You should, and this is going to lead into my next point, right? So, matter of fact, I'll just tell you this now. Point number 4: start slow. But you should be trying to start slow, right? So we're merging point 3 and point 4 together right now, y'all. But you should be starting slow. Your money, you have $1,000, for example. That's all your savings. That's all you're investing. You need to be able to survive anything, any encounters that come your way. They say most Americans can't survive a $400 emergency. $400, y'all. $400. Most Americans can't survive a $400 emergency. That's rough. And so here's the deal. A lot of people get caught into the cycle of investing their money into the markets. Again, investing their money into the markets. They put it all in. An emergency happens, i.e. their car breaks down. Then they have to cash out their investments before they were ready to, before they had hit the point of maximum profit or potential maximum profit. So you got to be, you have to be thoughtful of that, right? Again, it's not just willy-nilly. It's not just run it up. It's not just get a bag. It's make sure you can keep getting the bag as well, if that makes sense. Hopefully that makes sense to y'all. All right, but number 4, start slow. Start slow. What does that mean? If you don't know anything, why try to throw everything? Again, I'm going to use GameStop again. So me and Jimmy from By the Hood were talking about this other day, saying we got calls from people saying, yo, I got 10 grand sitting in savings. Should I just throw it at GameStop? I said, hell no. Why did I say hell no? I said hell no because they never had any experience investing at all. And so that's why I say start slow. Because best you believe it, had they brought in at, let's say, that 300 level when GameStop hit 300, and now GameStop is at 63, they may not ever want to invest again. They may just say, you know what, investing's not for me. Because they went too hard too fast. It's just like anything else, right? You want to start out slow. I'm on this whole health journey, fitness journey. Now, in high school, I used to run track. I used to run long distance. And I also ran like the 1 mile also. I think that's 1,600. I'm starting to forget some of that stuff. I'm rusty on it, right? But you don't build up the distance just by saying, you know what, I'm going to go out one day and run a 7 mile run. And I'm going to run that 7 mile run at 5 minutes a mile. You're not conditioned for it. You're probably not eating right for it. You're not getting the proper rest for it. I mean, so many things come into play. Same thing with a car, right? All right, y'all, I want to drive cross country. Oh, you do? Great. Is your car ready for it? Is the oil changed? You got good tire pressure? What about good brakes? You might want to drive that car real slow if you want to drive cross country or not drive it at all. But sometimes you got to do some things in preparation to get ready to take on the big mountain. So start slow. You know, I tell people all the time, to start investing, you'll need $1. $1. Now, there's been some other platforms that I talked about, but I'm actually going to start moving over, and I'll talk to y'all about that a little bit later. But you don't need $1. You can start investing in fractional shares. I brought $1 worth of Apple just to be a demonstration for everybody. I brought $1 of Apple. Guess what? It made money. I brought $1 of Amazon. Yeah, it made money. Might not always make money, but it made money this time. Right? So just keep that in mind. Keep that in mind. Start slow. So now that I brought my $1, maybe I can buy 10. I'll put $10 in. And then after I put $10 in, I can put $20 in. And after I invest $20 into Amazon or Apple, I can now put $40 in and $80 and $160 and so forth and so on, whatever you can afford to do. going back to point three, right? Don't let your eyes get too big. Just invest in whatever you can invest in that makes sense. Again, if you got a baby at home, baby need formula and Pampers, you still got to pay rent. It doesn't make sense to take all your money and pay on, or take all your money and invest into the stock market, especially when you don't have more money coming in or you don't have higher savings. You still gotta be a good steward, y'all. I tell y'all, stewardship is one of my favorite words. It's one of my favorite words because it impacts everything in life. If you really are serious about a thing, if you're a parent, your job is to be a good steward to your children. If you're a homeowner, you want to be a good steward to your home, right? Which 9 times out of 10 has your family in it. So that's a part of it. But what is good stewardship? Good stewardship is starting to think about things if you haven't thought about them before, starting to do things a little bit different if you haven't done them before, starting to plan out things if you haven't planned them out before. So everybody's covered, not just you, but everybody who you're kind of, I don't like the word in charge or boss, but let's just say in charge of, responsible for. How about that? You're responsible for. A lot of times people don't think about it, and they want to go about everything haphazardly. And that's not fair to your children or your house or your employees, right? You should be thinking about some other things. So again, start slow. Now, number 5 is understand your time horizon. Now, I talked about that a little bit in the beginning, but time horizon is really important, right? Why is time horizon important? Because time horizon, like I told you before, it really goes along with your overall goals. Time horizon is also really, really important when it comes to understanding how to deal with the markets. Warren Buffett probably talks about this best, right? He doesn't care about short-term anomalies. Warren Buffett doesn't care about short-term anomalies, again, like a GameStop, since everybody's up in arms about GameStop, because he knows in the long run, GameStop will just be a blip on the radar. Warren Buffett's time horizon is 100 years plus. He doesn't plan to sell his holdings at all. So when you're, and everybody doesn't have to be like Warren Buffett. We're just using Warren Buffett as an example. But if you're thinking like a Warren Buffett and you're saying, you know what, when I buy this stock, I'm buying it forever. Do you really care about what happens this week in the market? Really? Right? It's almost like getting married, right? The whole goal of getting married in traditional Western societies, you get married forever. You're not supposed to get divorced. Now, we know the stats are different, right? But just follow me here. If every time, and I'm going to speak from a man's perspective because I'm a man, but if I'm married and every time I see a new pretty face or a new shapely figure and I say, hey, I'm going to get divorced, that's not really going to make for that great of marriage, right? Now, you can always say, I don't want to be married. I'm not built for long-term relationships. I'm not built for monogamy. And people say that, but again, if your construct, if your framework is marriage long-term, having a partner, right, that's going to be there for you, that's more than just a pretty face, more than just a great figure, more than just, some fun, some short-term fun, then you would want to redirect that energy into your wife, into your marriage, into your spouse. And when I say wife, it could be love partner or life partner, whatever way you rock. But y'all, I think y'all get the point, right? If you just turn your eye and follow everything that you're going or you're attracted to, you're not really being true to the marriage, i.e. true to the investment that you pledged to. Now listen, sometimes things change. Things change. And everybody doesn't live up to their end of the bargain. Same thing with stocks. Sometimes stocks will have management changes that don't make any sense. Sometimes stocks will have, again, big blips. Again, example, Corona. None of the stocks could ever really anticipate that. There are many restaurants, many video game store, many other movie theater chain that was losing money before this thing happened, started to lose money even faster. So that just exacerbated the issue. So, you have to think about that. You got to think about that. So sometimes, again, if people aren't performing up to par within your overall time horizon, you have to say, well, That doesn't really make sense. That doesn't really make sense. All right. So, just keep that thought in mind, y'all. Keep that thought in mind. So we're at number 5. Number 5. All right. So I said education is key. I'm gonna reiterate this one. Research is key. That's number 6. Research is key. Understand what you are investing in. Understand what you're investing in. If you're investing in, I don't know, let's say a Microsoft. How does Microsoft make money? Does anybody know how Microsoft makes money? Do they make money off selling books? Do they make money off of selling kites? Do they make money off of flying kites? Or do they make money off of software? Right? Who buys their products? Who buys their services? Do you know? You should know. Again, these are 7 pieces of advice for new investors. And we are on number 6, research. So understand where they make money, how they make money. Again, let's use GameStop. Most of GameStop money came from in-store purchases. I know they did a bunch of other things, in-store purchases of software and things like that. I know they did other things, right? I know they had like all kinds of, sometimes they had events. Sometimes they did cell phone repair. Sometimes they might have even sold phones, right? But understand how a company makes money, and then understand, will they be able to make money for a long time frame? We know for certain, right? Utility companies, let's say they sell water, they're going to make money probably forever. Why? Because everybody needs water. The human body, some folks say it's 80%, some folks say it's made up of 90% of water. But we know water is a key element. We know it's a key element. Who do they sell the water to? Do they sell it to everybody on the planet? Like, is it like a Fiji or Aquafina or any of those other Dasanis? Not a pub for any of them, but just use them as examples, y'all. Is that who it's for? Is that what they're using it? I mean, is that who they're selling to? Or is it, again, like a local utility that can only sell to people in a local area, right? So you should understand that. Understand how they make money. Understand what it takes for them to make money, right? How much money do they have to spend to make money? There are certain companies that are more capital intensive, right? Capital intensive. Fancy word, it just means that it takes money to make money in that business. Fancy word to say that business takes a lot of money to make money in that business, right? So there are some companies that are more capital intensive than others. For example, anybody ever look at a Lockheed Martin or Boeing or General Dynamics? They're buying all kinds of materials. They have to hire some highly skilled, highly technical people. It takes a lot to make an airplane. It takes a lot to make a fighter jet. It takes a lot to I'm trying to think of what else to do a satellite system. Right? That's not just something you wake up to. What are the barriers of entry? Right? But let me back up before I go into barriers of entry. How does a company make money? Again, I just named Boeing, Lockheed, General Dynamic, right? Those companies oftentimes get their monies from government contracts. Everybody can't do it. What's the life of those government contracts? Will they be able to get them ongoing? Is this a once in a lifetime thing? You have to think about those things, right? So that's part of the research. That's part of the research. Don't be afraid to do the research, right? So then, let's go into barriers of entry. How easy is it for people to do this? People think I'm a smart guy. God bless those folks. I can't go into the business of General Dynamics. I can't go into the business of Boeing. The barrier of entry is way too high, right? I don't have the intellectual knowledge to do it. I can research it, yeah. I also don't have the capital to do it. So these are two barriers to entry that are there that I probably wouldn't be able to overcome, at least not right now. So you have to think about all those things. You got to think about all those things, right? Warren Buffett talks a lot about economic moats. So what's an economic moat? It's basically a company that can, one, differentiate itself from everybody else in the marketplace, and two, has a high barrier to entry. Everybody can't just come and do it, or at least they have a way of doing it that everybody else can't do. You want to understand those things about the companies. All right. Number seven, we are coming to a finale, y'all. We are coming to a finale. Number 7, do it all over again. Do all those things all over again in session. Know what your goal is. Know that education is a key. Don't let your eyeballs get too big for your pocketbook and wallet. Start slow, right? And make sure you understand your time horizon, right? Very, very important. Very, very important. All right. And research. Be sure to research, y'all. I mean, so I said a lot of things here. Don't follow the crowd. Develop your own process. Don't just jump into something just to jump into it. Understand it first before you jump into it, because you could be jumping into a disaster of pain, because everybody gets mad when they lose money. People get mad when they miss out on opportunities to make money too. But let's start with first things first. Make sure you understand what you're doing. Make sure you understand why you're doing it. I mean, basically what I broke down is the what, why, when, where, and how. That's all. What, why, when, here, and how. And just keep going over that process over and over and over again. All right, so we're going to take a couple minutes for any Q&A that we might have. I thought I saw a couple of questions, but go ahead and throw your questions in the comments. I'll stay on for about maybe 10 or so minutes. I got to get going. I got some other meetings, and I got to get some vittles. Y'all know I got to get my foods. So just let me know. Kaiser Teach, how are you? She does home delivery. How are you? Trey Snatch, what it do? DLC, how are you? Dre Day 211, how are you? Yours truly, Brianna. How you doing? Vaxmore, what's up, cousin? Ray Mays B, how are you? Calanders 251, how are you? MP Rays, I'm guessing that's North Philly Rays. What's up? What's up, Lou? Lou Blanco. Delphine and Diva, how are you? What's up, people? Happy Saturday to everybody. So let's see. Let's see what we got here. Any questions, comments, thoughts, concerns? It's all good. We take them all. Go ahead and throw it in the comments. If you're on Instagram, go ahead and throw it in the little question mark. You're watching the Finance Rebel Show. Today's segment is our Wealthy Conversations. Every Saturday we do Wealthy Conversations. Started at noon. Today we started a little late, but I'm here, you're here, so we're having a great time. All right, and today's topic is 7 pieces of advice for a new investor. So do me a favor. If you know anybody that's looking to learn more about finance, right, that wants to learn about it simple, easy, and plain, right, and to raise their financial IQ, invite them over to the Finance Rebel Show. That's what the show is for. That's what I'm about. That's what I try to practice every day, because I know there's a lot of people hurting out here, and the better you are, the better you have a good understanding of finance, about money, and everything that goes around it, the better life will be in the long run, right? It's not a quick fix. You don't just snap your fingers like I Dream of Genie. I might be dating myself there, right? So for the people that are watching WandaVision, Wanda, whoever, you can't just snap your fingers and it all be good that day. But a little bit every day will get you a long way. So, hey, that rhymed. I didn't even do that intentionally. All right, Mid-Atlantic says, what's the easiest way to understand support and resistance to enter stock? I would look at recent highs and recent lows, and then look at some historic highs and historic lows. Actually, what I will do is, I'll pull that up on the screen. I know you all are on Instagram, so you can't see this, but that's, I wouldn't say it's the best way to enter stock, but it's a good way to look at stock. Sometimes it will tell you a lot. Give me 1 second. I'm spilling stuff over here. So if you pull up an ETF, right, an exchange traded fund, what's an exchange traded fund? In this instance, it's just a basket of stocks, just a basket of stocks. But I'm going to pull up SPY, and we can take a look at that real quick, and we can look at some support and resistance. But here's the thing: when you're looking at support and resistance, you need to know what your time horizon is, right? Because support and resistance on a 1-day chart will look different than support and resistance on a 1-day chart will look different than support and resistance on a monthly chart or a weekly chart. So I will show you that in just 1 second. So, all right, everybody should be able to see this up on the screen. Let me blow this up a little bit more. Hopefully everybody can see this. So right now we are looking at, this is a monthly chart. Actually, let me jump out of this. This is a monthly chart. So I want to switch this down to a daily. So what you're looking at right now on the chart, these are candlesticks, right? Each piece of data or each one of these candles represents a month's worth of data. And so you'll see the high of the month, the low of the month, the opening of the month, and the close of the month, the closing price, the opening price, the low price, the high price. So you'll see that in each one of these months. But the market is in a long-term bull, so you can see some support and resistance, but I think I can better illustrate it on a daily chart. All right, so I'm just going to go from here. What you will want to do is, I just do a trend line to look at it. That's not what I wanted. Horizontal line is what I wanted. So I'll do a horizontal line, excuse me. Right, so I'll look at the recent high. Right, so right now we're looking at a bit of a ceiling at 37.82. So that's the high, right? Now, then, in any other stock, the markets are at all-time highs, right? So this isn't necessarily going to be the best illustration. I'll try to find some more. But you'll look here and you would go back and you will see, all right, well, when did the stock hit this price before and had problems? So since we're at all-time highs, that won't matter. But let's look at, let me pull this down. There we go. You're not cooperating with me today. So give me 1 second, folks. All right, so I'm going to look at another level here. I want to go to this high here. What day is that? So we got a high here on January 6, 2021. So now I want to go look and see were there other times that we had trouble there, or did the market have a hard time pushing through there? So then we also, on December 20th or December 21st, we had a bit of a problem there around those levels. It's not an exact science, but then you just want to go and keep looking down the line. Now, in another name, I could do this a little bit better for y'all, but I just kind of pulled this off the top. But that will be a resistance line. And then if I set a bottom here, that would be a support line. So it's usually when you see a price go up and it hits a ceiling, it has a hard time. So if you can imagine you're on a trampoline jumping up and down, and you hit your head on the ceiling, you're not going through that ceiling 9 times out of 10. However, if you go up really, really hard, your head might bust through. All right, because that's the way houses are constructed, or it should be constructed. If you hire a Jack Lay person off of YouTube, it might not be the same. Ideal or ID or actual key phrase there is Jack Lay. There's a lot of great people actually on YouTube, not to be confused. All right. And same thing with your floor or support level, right? So you have a floor or support level. So you could jump up and down on that floor, right? You're not going any further. You should be bouncing off the floor, or it should be giving you some sort of bounce. So it's the same thing. So if you see that happen repeatedly, what happens is you'll start to see ranges created, and a stock may only perform or may only move in that fashion. And so again, that's why they call it floor and ceiling, support and resistance. There's a lot of things people call it. So hopefully I answered your question, Mid-Atlantic. Deal Finding Diva said, do you suggest a new investor use a stock app like Stash or some other means to buy stocks? Stash is cool. I think I just found out today, because I thought you could only get mutual funds and ETFs and Stash and Acorns. I thought they were the same, but it looks like they might have changed. So I need to go back and look, because I just saw that Stash was giving out free stocks of Walgreens. So yeah, those are fine. There's a couple more. There's one I want to talk about that I'm starting to use now. We could talk about it a little bit later. All right. So Miss 327 said, what was number one? The number one was, what is your goal? What is your overall goal? Your goal should be dictating your moves. Ahava 25, I hope I said your name right. Andy Maxon, how are you? Mid-Atlantic said, great info. Oh, thank you. All right, cool. All right, so let's see what else we got over here. What we got? Miss Eva said, what was number one? Miss Eva, number one was, what is your goal? All right, Kathy Lucas asks, I invest in fractional shares of Stockpile. Stockpile's another good one too. Stockpile is actually great for giving your children stock certificates or gift cards via stock certificates. So you can give your children gifts of stock. And then y'all know, in my opinion, one of the best ways of teaching children about investing in stocks and wealth is by giving them actual stocks and then talking to them about the companies you're buying. Right? There was a story about a young man who got, I want to say it was either 10 or 100. I forget what it was, but he got 10 shares of GameStop stock for Kwanzaa. Cashed it out. But they got him that because he's about that gamer life. And he's like 10 now. But he cashed it out. And I'm not mad at that. Somebody said he shouldn't have sold. Why? It was a lottery pick he got lucky on. Get rid of it. Cash out and move on. All right, so I invest in fractional shares of Stockpile. I certainly can't afford to buy whole shares unless they are affordable. Yeah, listen, the share price, the number of shares you have doesn't really matter. What matters is your investment return. So, for example, remember when I said I bought $1 worth of Apple, $1 worth of Amazon? Well, he did great, percentage-wise. So I just took $1 that I could have left in the bank, but I put it into the stock market. I put it in the Apple, and it did like 20%. I'm not going to get 20% in my bank account. Now, please don't confuse that with not putting money in the bank. I see so many people say that you don't need to have savings in the bank, and that's nutty. That's nuttier than squared poo-poo. I told you I'm trying to be good and not cuss. You still should have money in the bank. Why? To take advantage of any other opportunities that may arise. Why? To take advantage well, not take advantage, right? But protect yourself from any bad things that might arise. Roof falls in, car breaks down. You don't want to sell your stock out and create, one, a taxable event, more than likely, and then two, miss out on your opportunity to make more money. Keep it separate. Keep it separate. But that's awesome, Miss Kathy. Thanks for that. All right. You do says over here now too. I started with 500 in crypto last week. All right, that's cool. You can start with whatever you can afford to, but I know you do a John's situation a little bit better. He probably can afford $500 a week. He's a side hustler, and he's got a full-time job. He can do that. One of the worst things we all can do in terms of investing is compare ourselves to other people, just like in life. If a person has, a sweater that you want, and it's like, man, I want that sweater, but it's a cashmere sweater, and that cashmere sweater is like $1,000, and you can't afford $1,000. Don't get the sweater, y'all. Don't be pressed about it. All right, so Ms. Edith says that happened to me, to my colleague, joined an investment group, got burned, and never invested again. Yeah, it happens. That's why you got to only deal with reputable people that got something to lose, and that people that are going to be around. Right. And that's not to say that things don't happen or people don't make mistakes. Right. But here's the thing. When people make mistakes, rock with the people who openly make mistakes and acknowledge those mistakes, apologize for those mistakes, and try to make everyone whole, or at least, be accountable for those mistakes. I might say your name wrong. Mila. If I said your name wrong, I'm sorry. But welcome. All right, so let me get to the rest of these. Yeah, Christopher, read a book. It works. Reading works. You get to take advantage of somebody else's research. Now, there are some people that buy these books that are pre-made and they just slap logos on them and they sell them. Be careful of those, because that's just recycled information. But yeah, reading matters, y'all. Reading works. You get the benefit off of a person's years and years of research, experience, and education for a couple bucks. It's okay. All right, so number 7. Thank you, Miss Kathy. I hope everybody feels the same way. Thank you, Miss Edith. Hey, Katisa, thank you. Great show. Thank you. I appreciate you. All right, I appreciate that. All right, James Bronner. I see a lot of people using various apps to invest. Why can't you transfer investments from them into one or different forms without cashing out? You can. Some of them you can, some of them you can't. But a lot of them you can. Like Robinhood, for example, right? A lot of people cashed out of Robinhood and went to other platforms, right? And so I will tell you now, I'm not sure what I'm going to do, but I'm going to start using Public more often. And I'm going to start sharing all my stuff there. I just put the link in the comment section, right? So you can follow my Public. Also, if you join under my link, you can get a free share, and then I will get a free share, right? So it's mutually beneficial. But a lot of people are taking their money out of Robinhood and they're going to Public. And Public is a very social kind of exchange. That's what I'm going to be rocking out with for the stuff that I show the public. So you probably won't see me talking too much more about the Robinhoods and the Cash Apps. While I still like them both, I like the social interaction of Public. So you'll see me doing a lot more of those. All right, KO is a range company. So KO is Coca-Cola. Thank you for that. I wasn't prepped for that question. I just took it. Hopefully I didn't confuse anybody. So let me pull up KO real quick. KO is Coca-Cola for everybody that wants to know. Coca-Cola. Oh yeah. All right, so I'm going to share Coca-Cola on the screen with y'all real quick, just so y'all can see this. Let me know if everybody can see that. I feel like sometimes when I'm trying to share the screen in terms of charts, it's not the best visual representation. Hopefully, again, let me know if y'all can see that or not. All right, so this is Coca-Cola. All right, so at the bottom there, you're looking at volume. Everything else, again, are candlesticks. Again, this is a daily chart. One candle here represents 1 day's worth of information. So, you know what? I forgot to get this going. And so we can go back here because this is better, right? So on September 5th, 2019, we saw a high, right? And then, okay, once it hit that ceiling, there was a problem. It bounced down. And then if you can look here again, it's not the best graphics. I got to figure that out. I need to get something better for y'all. When you look here, this is January 14th. You saw the stock price kind of bounce around that, and it hit the ceiling, right? It hit the resistance, and then it bust through resistance. So this is a great example of resistance right here, right? So it hit this high, hit this all-time high, hit that resistance level, and then it fell in price, right? Fell down, kind of gathered itself a little bit, ran back up, right? Hit that resistance level again, hit it a couple times, and then it bust through. So support levels and resistance levels happen all the time. If you look here, this is September 20th. This is September 20th, the 2nd of September, September 20th. This was hitting a support line, right? It was support, bust down, right? A little bit. Then it came back up, hit the support level, then kind of jumped through the floor again. Then it was hitting. Now your support will come resistance. So when you go down, right? Or when you go up, but when you go down, for this example, when you go down into the floor, when you try to come back up again, it then becomes your resistance level. So your bottom has now become a top because you've gone down in the floor, right? So now you're trying to fight your way back up. So again, it came back through, then it bust through, it hit the floor, hit the ceiling, and then it bust through, it gapped up, it bust all the way through. And so that ceiling then became the floor, if that makes sense. I know Mid-Atlantic was asking about that, so hopefully you're still on to hear some of that commentary. Rich Money 980, how are you? Lulu Pops and SPEK2, how are y'all? So like that's important when we're talking about support and resistance levels, y'all. So again, hopefully I explained that clearly. And the deer says, no, it's not the best. I know. Okay. Yeah, I'm gonna work on it. I gotta work on it. I gotta see and play. I gotta play with the settings a little bit. So James said, no, I mean I have 40 shares of XYZ on one platform. Why can't I transfer those shares rather than cash them out? You can. You can do it ACAT. Some platforms you can't do it on, but most of them you can. You can do an ACAT form. Don't ask me what ACAT stands for. I've transferred a bunch of 401k plans back in my financial advisor days. That's the name of the form. But I know for sure a bunch of people were doing that with Robinhood. Matter of fact, I saw some people doing TikTok videos talking about that very thing. So you can transfer again. Jimmy, what platform are you on? Which platform are you talking about? What's up, Fiali? How you doing? Thanks for joining us today. All right, so again, there's a lot of moving parts to this. That's why you got to study up, y'all. And it's that question James has asked. That's a good question, right? So I talked to y'all about the theory of everything else. Now we're talking about, or we'll talk about, like what should you do before you start investing? Because people say, well, how do you invest, right? Well, sometimes I'm like, well, that's easy. Just go get a brokerage account. But that question he just asked is a question you should understand before you select your brokerage account, right? So I know you can do it on Robinhood. I've never looked at that function on Cash App, just to be honest with you. Okay, Robin, you're right. So you can do it on Robinhood. You can absolutely transfer out on Robinhood. Now, by the way, I have no problem with Robinhood. What do you mean they said no? I think there's a charge of like $75, but what do you mean they said no? Send me what they sent you. You can absolutely do it. Maybe I'm not totally understanding, but now I will say that sometimes when you have fractional shares and they're all fractional shares, it becomes an issue. So yes, you may have to cash those out. And I don't want to bore y'all, but that's because of the clearing behind the scene. Basically, how do you transfer ownership? It's hard to transfer the ownership of fractional shares. So yeah, just let me know. I'll be really interested to see that. But all right, I said 5 minutes more. We stayed over 20 minutes more. All right, so remember, y'all, I am now going to start moving to public. I'm going to be sharing the investments I make on public. It will be open. It's private domain. Make sure y'all go follow me over there. If you want to join public, you'll get a stock. I'll get a stock, right? So I do get some kind of incentive. I get some kind of compensation. So I always want to be open and transparent about that. But you'll be able to see the things that I'm buying. So come on over. Matter of fact, I didn't even realize I had a public account. I started it last year in April. Forgot about it. My homegirl Courtney said, hey, you got to come get on. And she sent me the link. And I'm like, I'm already on. And I didn't realize it. So I have a fractional share of, let's see if I can show it to y'all. Let me find it real quick. I have a fractional share of Johnson & Johnson and a fractional share of Procter & Gamble. Two companies that are phenomenal that I am big fans of. But all right, hold on, y'all. I will show y'all what it looks like. So everybody, the whole world can now see my picks. I will be exposed, y'all. I'm gonna be exposed. All right, so I'm gonna pull this up. Give me 1 second. So this is just my public, and again, I haven't used it since last year. Actually, I forgot about it, y'all. And so you can get on here. You can follow me on here. Again, if you want to use the platform, I'll get a free share if you use my link that I just put in, and you will get a free share as well. But then there's other things you can start doing research on. It's very educational centric. And so I like it. So I'm going to rock with it. So that's the account that I will be using to share all my public stuff. You know how I like to talk to y'all about my Ford and a few other things. So, all right, y'all let me know what comments, thoughts, and concerns you might have. Let me know if y'all have any wealthy conversations ideas for us to cover. Shout out to Ladina for doing that. Sure. I will put the link in the comments again. There we go. But yeah, let me know what comments y'all might have. And also throughout the week, make sure y'all check in with me in the Finance Rebel Academy. So just search Finance Rebel Academy. Come on in. We talk about stocks and investments and budgeting, some of the basic wealth building things that you can get. I'm not I like Ford. Ford's got a lot going on. Ford, I just made 800 and 600 some odd percent on Ford, and some calls that I had since August. So Ford's cool. So Curtis, what I'm speaking about, y'all, sorry I didn't put that out there. So Ford, can you get rich Bitcoin? Right. So for me, it's not about getting rich quick, y'all. Hear me when I say this. I'm not looking to get rich quick. I'm looking to get rich slow and stay rich. I'm looking to get rich slow and stay rich. All right. So just be mindful of that, because A lot of people are running and chasing the bag. We just talked about that. But they don't have any knowledge, any expertise, and any staying power. Staying power is what's most important for me. I'm looking to create generational wealth. Proverbs 13:22. Yeah. Yes. Yeah. And listen, I don't have a problem with Bitcoin either. I'm just not on the Bitcoin bandwagon like everybody else is. But Bitcoin, Ethereum, some of these other coins that are coming out, like Dogecoin, you talked about a little bit earlier, they have value. I don't consider them currencies though, right? So I'm not drinking that Kool-Aid, but they do have value, and in certain instances, they can be used to have private purchases and things like that. So it all depends on where you're at. It all depends on where you're at. All right. So E. Blakenik says Apple's last quarter was in the billions despite a pandemic. Right. The tortoise wins the race, not the hare. Can dig it. Yeah, that's the vibe I'm on. Blessed with locks. How are you? Happy Saturday. Meekness 17. How you doing? Thanks for joining. We're just about to wrap up though. Big Man Tech. Just talked to you yesterday, bro. How you doing? Yep. So, I don't usually show my call options and things like that. I talked about it a little bit the other day though. So this platform, what we talking about here is mainly for beginners. I love the beginners because if we can get more people into the market, if we can get more people that will have an investment mindset, right? You can turn off the consumerism mindset. You cannot buy your way to wealth and riches at all. You can invest your way to wealth. You can create a business to wealth, right? You can save your way to wealth. That's kind of hard, but it's a part of the overall formula in the pie. It's part of the process. But the better you develop an investment mindset, the more you will understand investing, you'll understand business, and you'll understand the value of your dollar more when it relates to spending money with companies that, one, don't care about you, your family, or your community, won't even hire us, only want to sell to us. They only want a one-way transaction with us. It's not mutually beneficial, right? That's one. But two, you'll become a better business owner. And you'll understand that your money is better off being used investing in somebody's business, somebody's education, your business, or your portfolio. So that's part of the reason why I love the stock market. Part of the reason why I love the stock market. All right, so Curtis says the stock game for patient people to get wealthy. Yep. I know a lot of 401k millionaires, y'all. I know a lot of people talk trash about 401ks. They all don't know anything. Trust me when I tell you. So all right, Curtis, you must be tapping into my line right now. So I've been talking about Ford, right? You look at Ford, they're big in EVs or electronic vehicles. Volkswagen is really big in EVs, electronic vehicles. We just saw the president of the United States, Joe Biden, say that the government is going to start switching over to all electronic vehicles. GM just announced by 2035, they will only produce electronic or hybrid vehicles, some kind of alternative vehicles. They're getting off the gas standard. So yes, one of the biggest opportunities I think that it's out there is for the infrastructure for charging stations for these electronic vehicles. I think it's going to be a slow and long play. I don't even think everybody is quite here yet. And I've been starting to do some research. When I get through to it, I'll definitely share what I think to y'all. Let's see. Still learning. How you doing? Hey, lady. What's up, T? What was number 5? Somebody tell Angela what number 5 was. This is a community thing. Y'all can't rely on me for everything. What was number 5? Anybody remember? Somebody put it in the chat. Let's see if y'all was paying attention. Or were y'all asleep during class was in session? What was number 5, y'all? Anybody know? Research. Or 6 research. Now I'm confusing myself. I got to go back to my notes. Yeah. All right. So Curtis says Tesla has 1% of EV market, 99% left. Yes, but I'm not a Tesla fan. All right. Thank you. 6 was time horizon. So what was your question about 401ks before I close this out? Nadira, I believe your name is. Before I close out, if anybody has any questions, real quick, throw them all in. Nicola's making infrastructure for charging networks. What I thought Nicola was actually doing the trucks. I thought Nicola was doing the trucks. Am I wrong? Nicola stock surged 51% in January. But they ain't made no money yet. I get it. It's all about the technology, though. I get it. Thank you, Ms. Edith. Somebody was paying attention. When's the class? Yes, I'm working on that now. If y'all are on in my text community, I will be announcing it there first. Make sure you are in my text community. You can text me at 215-974-0058. Again, 215-974-0058. I'm going to do the 401k clinic before the end. It's either going to be before the end of February or like at the very beginning of March. I have just about everything there. I just have to figure out where I want to put it and what I want to charge for it. But it's coming, and it's coming quick. So make sure y'all get your 401k statements together. I know it's Edith. I was just playing. All right, I got y'all covered. What's my time horizon? So for me, our generic time horizon here is 10 years. So everything here is for the beginner investor. So I tell everybody when you first start, just start off with 10 years. All right. So that's long term. It's easier to learn about a thing or about the markets when you are not so pressed to try to, compete and make money and analyze on a day-to-day or week-to-week or even a month-to-month basis. But when you can actually take your time, get really immersed into the markets, begin to understand the markets, and really dig into the markets, I think, I feel that that's the best way to go. Yeah, Frank, sometimes, but people have been saying that about Tesla, and Tesla has been saying that they've been making money and they really haven't. So you got to get ahead of the curve in a smart way. And yes, sometimes it is an educated gamble. I get it. All right, y'all. So I'm about to start building out things on Public. So make sure y'all come on over to Public. If y'all didn't see that link, follow me over there. And also make sure you text me to get into the community. Again, 215-974-0058. Again, 215-974-0058. And when you text me, just text me 401k clinic if that's what you are interested in. All right, folks, everybody have a great day. Enjoy the rest of the day. And by the way, I should have asked this earlier. Who's going to win the Super Bowl? Who y'all betting on? Y'all betting on Tampa Bay or you betting on Kansas City? I'm still in disbelief that during all this pandemic that Tampa Bay and Kansas City is in the game. But who knows? Tom Brady strikes again. Can't hate on Tom Brady. But all right, y'all. Everybody have a great day, and I will see you all soon. Bye-bye.